Hello everyone and welcome to NAGA Academy's webinar with the title Trading the Oscillators. My name is Constantinos Aristophanous. I'm head of the NAGA Academy. I'm a certified financial technician, and today we will be monitoring the oscillators. We will learn the basic theory of behind the oscillators and how you can trade the oscillators profitably with proven strategies that are applied by technical analysts in order to trade the markets just by applying the oscillators. We will just wait a couple of minutes until we have the last minute sign-ups, because I can see people still joining. And we will continue in approximately 1 to 2 minutes. So, thank you everyone for joining. Today, as stated before, we will have our online webinar with trading the oscillators topic. We will be applying strategies and on trading various instruments. Trading the oscillators is an interesting topic. We will go through the theory behind the oscillators, how and what are the oscillators, how they work, how they are structured, and all our technical analysis today and presentation will be done on NAGA Trader. NAGA Trader, it's our own custom-made platform, trading platform. It's a unique trading platform. It's great and simple to apply technical analysis. It's also applicable for newbies, quietly more advanced and experienced traders. It uses TradingView charts, which are widely recognized and applied in the industry. You can find more about our NAGA Trader and how to use the NAGA Trader in our NAGA Academy, which will also be, we will be making new videos, how-to videos, in order to inform the traders and individuals who wish to trade on the NAGA Trader and find it for any reason difficult, or they're not used to the TradingView charts. We will also be launching different how-to videos. Right, let's start. What are oscillators and how are oscillators used? Usually oscillators are momentum indicators, and they are used when viewing charts that are non-trending. They're very good at choppy markets, at trading ranges. For example, we have here a choppy market. We have the sideways movement, and they are greatly used. They have the strong points is during a choppy market, sideways movement. Moving averages and trends are paramount when studying the direction of an instrument. Technical analysts or technicians will use oscillators when the charts are not showing a definite trend in either direction. Although this is the theory behind, we will also learn today how you can use the oscillators also in trading conditions when we have either an uptrend or a downtrend. Except from choppy situations or trendless markets, signals are also provided during uptrends and downtrends. You usually don't find them in technical analysis books or YouTube videos, but we do have such strategies and we will share them with you today. Oscillators are also beneficial when an instrument is either in a horizontal or sideways trading pattern, as we said before, the trading range, and has not been able to establish a definite trend in the market. When an instrument is either in an overbought or oversold situation, for example, most oscillators, they have an overbought area and an oversold. As you can see on our chart on the RSI, Relative Strength Index, we have the overbought area and oversold. For RSI, the overbought area is above 70 and below 30 is the oversold. So we have overbought and oversold. These two areas are usually when signals are provided, either when the oscillator reaches the overbought area or the oversold. We will get into more details on how to trade and the signals that are provided in these areas and on a later stage. Now, with oscillators, a chartist can see when the stock is running out of steam on the upside or downside, the point at which the instrument moves into an overbought situation or oversold situation. This simply means that when buying volume has been diminished for a number of trading days, which means traders will start to sell. We will also explain this in a bit, and basically an instrument has been sold by a greater number of investors for a consistent period of time, ranging usually from 1 to 6, and this also depends on the days, because on oscillators we can also have we can choose the periods. For example, here we have the RSI 14, which takes into consideration the last 14 days, minutes. It's the periods depending on what chart. For example, here we have the last 14 30-minute candlesticks. Now we have the overbought and oversold, as we stated before. For example, here we can, if we go back slightly, we can see a trading. We can see the euro dollar trading on the uptrend, on a steady uptrend trend. Now we tend not to apply the oscillators during trends. We do prefer them in sideways movements, as we have a perfect corresponding movement on the oscillator. So when we do have here's a good example. Now a good signal on the RSI, or as many traders know, once the RSI or any momentum indicator drops into the oversold, traders tend to buy. The opposite happens when the momentum indicator reaches the overbought. They tend to sell. Now, if we have a trending market, a trend, in this instance, euro-dollar is trading in a strong downtrend, the momentum indicator tends to stay below the oversold area, thus false signals are provided and a lot of whipsaws. For example, if a trader entered a long position here, obviously it would have been a losing trade as euro-dollar continued its downward movement. We will explain later how to trade on strong trends, but for now we will emphasize on the overbought and oversold, on sideways movements, on trendless markets. Now, if we do find sideways movement, for example, here, let's zoom out a bit. For example, here a sideways movement is observed. We have no trend. When the RSI reaches the overbought area, That's a sell signal, and as we can observe, the price continued its downward movement. Since its sideways movement, also, if the RSI here, it did not quite reach, if it did reach the oversold area, it would have been a nice buy signal. And as we can observe, price moved to the upside. The same here. We have a sell signal here. Not quite the sell signal here though. Anyway, then we had a strong downtrend to the downside, and this is when our momentum indicator, our RSI oscillator, that's when it started giving false signals because it was trending strongly to the downside, and it tends to have a lot of whipsaws. It's not a trend following indicator, and as stated before, it's very good for sideways movements. I also had an example here on the RSI. Another good signal for the oscillators, especially the RSI, is finding divergences. And I will explain also what a divergence is, how it can be observed, and how it can be traded. As I said before, the momentum indicators do fluctuate from overbought to oversold extreme levels. Basically, what are these overbought and oversold levels? They tend to reflect the crowd psychology and measure the intensity of the general mood of market participants. So it's when emotions start to get in, and for example, greed, fear, hope to despair, and so forth. And this tends to reflect on the charts and can be monitored through the momentum indicator, through the oscillators. Now, coming down to and explaining the divergences. Another good thing we can see and chart on the oscillators, they don't tend to pop up frequently. It's patterns. When we're referring to patterns, we're referring to Dow theory patterns. For example, double tops, double bottoms, head and shoulders, failure swings. When we do see them, they tend to be very accurate and are very good signals in order to enter the market. We will find a very good example of this, and I think I have one here. This is the MACD. We will go to the MACD and the CCI and no. Now we can see, for example, let's find the double top. Here's a double top. Price never managed to break above the double top, and we can also see sideways movement on the chart, and then after the price failed to make new highs, we can just see a slight blow off to the upside, and price then continued its downward direction. Double tops, double bottoms are very good patterns. They are easily to detect and are also very promising as signals. Also, as stated before, we have the divergences. What's a divergence? A divergence is when price continues to make lower lows, but the indicator fails to do so. For example, in this scenario here, we had euro dollar breaking and making a new low, whilst the RSI indicator was failing to make new lows and was making higher lows. So this formed a positive divergence. These are also good signals, but most advanced technical traders, technical analysis traders, they tend to trade these signals with another strategy. I mean, they're good to trade by themselves, but are more promising when they are confirmed with another strategy. For example, trend traders, failure swing traders, support resistance. For example, if we had a great support here at the 112.70 area, and we saw a positive divergence forming. We could also wait for a failing swing to complete to the upside, and then yes, we do have a rally to the upside. So we do tend to wait for a confirmation. Now this is a positive divergence. Remember, lower lows on price, higher lows on the momentum indicator, on the oscillator. This is a good example. It can be seen here. RSI failed to make a lower low, whilst price did, and then we can see a reversal in price. We can also see one here. For example, price made higher highs. We can also see this here. Price is making higher highs, whilst RSI is failing to do so. It's making lower highs. This is known as a negative divergence. And then we do have a correction to the downside, and the correction is continuing. Also, we can see a retest on price on the 140 or 114 level, and we can see that the RSI is struggling and it hasn't even reached its overbought level. These are good signals, and they tend to have high success ratios, promising success ratios. Now, another oscillator is one of my favorites, is the stochastic. I had my first strategy programmed on stochastic. I tend to like stochastic. One of my favorites is stochastic, and the CCI indicator. I have it also here, the commodity channel index. We'll come back to the CCI later on. Now, the stochastic oscillator, unlike the RSI, tend to be known as a breakout oscillator. We do have the same signals, or quite a few similar signals to the RSI. For example, we do have the negative divergences, but the difference between the stochastic and the rest of the oscillators is that the stochastic indicator is a breakout oscillator. It does have the overbought and oversold exactly as the RSI, with the difference that for stochastic, the overbought level is the 80 and the oversold is the 20. But even though traders do trade the oversold as buy signals and overbought as sell signals, the theory behind the stochastic is exactly the opposite. It's known as a breakout oscillator because, and it's also very, very similar to the CCI. It's quite matching exactly the signals. Is when the stochastic breaks below the oversold, it's initiating short positions, sell signals. Unlike the RSI, when it drops below the oversold and we're looking for buying areas, for stochastic, actually it's the opposite. So when we do see a break below the oversold and below a key position, for example, a support, we have a support here, price is struggling to break below. We do see a break on the stochastic below the oversold, and then we can confirm this with the price breaking and rallying to the downside. This can also be confirmed exactly on the next step. We do also have a break on the upside, and we can see a rally also to the upside. This is how stochastic tends to provide signals. We can also draw trend lines on the stochastic. We can chart it. Remember, we can chart all oscillators exactly like we chart price. For example, we can also identify extreme areas above and below the oversold, apart from the default ones. For example, we have here the 80, and we can also chart, I'll draw a horizontal ray here. I will make one. It's the 99.96. We can see that price tends to reach this area and is considered as an absolute area. I have a fellow trader, which and also a portfolio manager. He has worked before on these absolute extreme areas. So we tend to see price reaching and struggling to break above. For example, here, that's an absolute area, and then we can see a correction to the downside. Also, here we have another good example of price of the oscillator, the stochastic breaking below, and price starting to correct to the downside. It can be used on by all traders if he's a scalper, if he's a trend trader, long-term, medium. He just adapts his strategy and can wait for a confirmation by the oscillators. For example, a scalper here could have entered short positions on the break below. He can steal his 5-10 pips, or even if he's a long-term trader, he can find on a bigger time frames and get a confirmation, an entry point from a smaller time frame. This is also known as multi-time frame trading, which I will go on a later stage. Well, actually, multi-time frame trading it's a whole topic by itself, and it will be nice to organize another webinar just by applying multi-time trading strategies and tricks. Now, and we will skip and go to the DAX in order to see the MACD. MACD is also another good oscillator, momentum indicator. It's used by a great number of traders, and it's very similar to the other oscillators, especially RSI. We do though have the MACD histogram, which basically the histogram, for anyone that's not aware, is just showing us whenever a trigger line crosses above the signal line. For example, here we have a crossover, and it's more visible on the histogram. So we see above the equilibrium line when the histogram trades above the equilibrium line, this is where we can observe a crossover. This can be a signal by itself, but it does tend to have a lot of whipsaws, and we tend to wait and observe further signals, better signals in order to enter the market. We do have one here on the DAX index daily chart. We can observe a triple bottom and a descending triangle also on the DAX index. Price struggled and did not manage to break the 11,700 area. It made a triple bottom, but every time it retested this support area, the reading on the MACD failed to make new lows or even retest the absolute bottom. So this is also a divergence. Price was retesting the same support level, but the MACD was always making higher lows instead of lower lows, or at least retesting the same area. Now, this was a very promising signal, and as I said before, it was on a daily chart, so it can be applied on all time frames. And afterwards, when we had the confirmation also by a swing completing to the upside, we did have a break and then a retest. We had a big movement to the upside of nearly 1,000 points. So from 12,300, it went all the way up from 13,150. Someone could have also entered this trade at the low here by just confirming the higher lows and the price retesting the support area. So this, by trading the MACD, could have also signaled a buy trade to the upside. Now, this is how the MACD works. It's not as choppy. It tends to be more smooth than the rest. For example, ROC or RSI. It's a more smooth indicator. And again, we do have extremes. Now, unlike the rest, for example, RSI, MACD does not have an overbought and oversold area. There is not an overbought or any oversold, so it can reach extreme lows or highs. For example, we have a reading here of 245, where it tended to range between 0 and 140. We did have an extreme reading of 220. It doesn't have an overbought or oversold. We do tend, for example, here we have another divergence. We're waiting for another signal, a confirmation signal, in order to enter a long trade, a buy trade. Now, we have one of my favorites, is the CCI. I have also a whole algorithmic strategy based on CCI. CCI is one of my favorites, and I will also explain the signals that can be traded by CCI. Like the stochastic, the CCI provides signals. It does have an overbought and an oversold. The overbought is the 100, the oversold is the minus 100. We have the equilibrium line at 0, but the CCI is like the stochastic oscillator. It provides signals once the reading breaks above the overbought. So instead of having short positions initiated, we have long positions once price breaks above. So here we have a nice signal. We have a reading breaking above the 100, and price continued its rally of approximately 3,900 to 4,300. That was quite a big move. It's Bitcoin, of course. We have $1,000 move just by a CCI signal breaking above its overbought. So, quick recap. Unlike other oscillators, the stochastic and the CCI provides signals once it breaks above its overbought. Unlike RSI, when it's exactly the opposite. RSI, ROC, and the rest, they provide signals once price reaches the overbought. But with CCI, it's once price breaks above the overbought. Now, we can also see a break here on the CCI for the first time, breaking below, which was exactly here. And once it broke below its oversold, it did provide a move of $300. Now, there is also another way of trading the oscillators, and it's this is a very smart strategy. You don't usually find this kind of strategies on the net or YouTube, but I use them a lot. We apply them here at NAGA and our NAGA portfolio managers. It's by combining two indicators in order to establish the trend on the bigger indicator, and then we have a smaller one. For example, in this instance, we have the CCI 50 and the CCI 5 period. Now, this one, as you can see, is a more choppy one, but the bigger one provides a bigger picture. Now, a very, very good strategy is by establishing the trend on the bigger indicator. For example, we have a break on the upside signaling strong upward movement, and then we're waiting for the smaller one to reach our oversold area. It did provide us, as you can see here, we have the CCI 50 above our overbought area, and we have a break, a slight piercing below the oversold. This tends to be one of the most accurate signals to the upside, and vice versa. If, for example, this it was trading on the oversold, and then we had a pierce above the overbought on the smaller time frame CCI, then it would have been a good sell signal. And once we did observe exactly at this point, it gave us a buy signal, and as you can see, I can't even recognize if it did make if it did go any lower, and then price bounced and continued another leg to the upside. This is also a very nice and good strategy that is applied by technical analysts. We do tend to see, for example, here we do have a strong trading reading of the CCI below its oversold, and in this instance, it's signaling short positions, and we had a slight pierce on the smaller time frame to the overbought. So this can be, as we speak now, a good sell signal where we hope we might see another leg to the downside. Now, this is how we tend to trade the CCI, and by combining two indicators on the same chart. Okay, sorry about that. So, okay, now we explained the CCI. We explained how you can combine two indicators on the same chart with a greater one in order to establish the trend, and the smaller one to provide to have a confirmation or a signal, an entry point. Okay, we will see what we have next. Another example we have is as we said, I will bring it on the chart here, is we have a trend line, a falling trend line. As we stated before, we have the oscillator. We can chart the oscillator by drawing a trend line. We did have a confirmation, a break above the trend line well before price did. We do not enter. This is an alert. We wait for the price. We have a price confirmation breaking above the trend line, and then we see price rallying to the upside. These are good examples of how to trade the oscillators. This is how traders and more advanced usually trend the oscillators. As always, we do not rely 100% purely on the oscillator signals, but we use them in line with our main strategy. For example, if we observe, let's chart Bitcoin. We have a trend line. We can see a nice uptrend trend. We do see a break below our trend line, a retest. For example, price is struggling. It doesn't mean that we cannot see more upward movement, but exactly at this point, we see our CCI indicator breaking below, providing us with a sell signal. So we do have a break below our trend line, and then a confirmation from our CCI. We can also chart, and let's place also our RSI, see what RSI provided us at this point. For example, here, RSI, we had a choppy situation here. Price was in sideways movement, and the RSI provided us with a sell signal up here. Then we had a confirmation. As stated before, it's not wise to enter long positions once we see volatile or rapid movements. In this instance, we had a strong downward movement, and we can see RSI not recognizing its oversold area and tend to trade. We can also observe RSI in strong trending conditions. It trades for quite a big amount of time in its oversold or overbought area. So it's not wise to trade the overbought and oversold in trending conditions. Now, if we do see a break on the upside and sideways movement, and the Bitcoin also struggling to determine a new direction, and then yes, we can trade the overbought and oversold. Now let's also see what Stochastic did, which aligns perfectly with the CCI. Stochastic also provided us with a sell signal here. As stated before, it's a breakout oscillator. It wasn't as fast as the CCI, but it did provide a sell signal here. To be honest, it could have been on this candlestick, so the big movement has been lost. Anyhow, it did provide us with a sell signal. And since it was in choppy situations, we can also see a slight pierce to the upside at this top here. So it can be recognized as some sort of a sell signal. We will also check our MACD. MACD, what did MACD say now? MACD, interesting. We had higher highs in price on MACD, and we had exactly a very good divergence here. Now, this is also a nice setup example. As stated before, we had higher highs on Bitcoin, but momentum was failing to show readings and the break above the higher high. This is a very nice example. This could have been recognized as a get out of the trade. Price was failing to make new highs on the MACD. It was like an alert signal, something's going wrong, and then price consolidated slightly and it broke to the downside. If we expand the trend line on the MACD, we can also see that it's also respecting the downward trend line. Once we do observe a break above, then we can monitor price and see if we see a confirmation in order to enter on the opposite direction. This is it. I think we've covered enough. Well, we didn't get into the theory as much, but I think it will be appreciated better. I mean, theories are all over the place. It's nice to see applying the strategies on charts, and stay tuned. And I won't be doing webinars quite often, but when I do, always know that I will be implementing the theories and will be making live technical analysis applying the theory on the charts So it's a more hands-on webinar instead of covering all the theories, which are everywhere now. I mean, everyone's doing, the basic concepts of RSI or the trends or the trend lines. Yeah, but I will tend to do all my webinars live and trading the instruments and applying the theories and trading strategies on the charts. Thank you very much for watching. Thank you for joining us, and stay tuned. We will be back, and we will publish another webinar soon, most probably by the mid of December, or even right before the Christmas holidays. Thank you very much for watching.